What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys with the market sentiments and then roll into some upcoming events, whether that is with the Fed or earnings, and then roll into some stock picks that I'm looking at for the week. So if that sounds like something you're interested in, consider subscribing, as I do provide daily updates as well. I do provide market calls as well and weekly updates to get you prepared for the day and the week ahead. But with all that being said, market sentiments, where are we at? What are we doing? What is really important, what's going on here, is that we have to see the Fed is really, what is the Fed really looking at? And the market is really waiting on the next Fed move, which I thought it was on the 15th. So I do have to apologize for that. It is not on the 15th. The Fed meeting is actually on the 26th and 27th of the month. So we do have a while, and the banks will start coming out with earnings around the 15th. And then the weeks to follow, you'll start having big tech, primarily led by Netflix, and Tesla's been kind of moving up their earnings. So we'll see if those two start to lead the pack for big tech and then get some of the bigger earnings as well, follow right directly behind that with Google, Apple, Amazon. So we got a big month at hand. There's a lot of stuff going on. But ultimately, we're trying to focus on this week. So as far as the market sentiment goes, the market is looking at the consumer. What is the consumer doing? And that is what we have to pay attention to. And right now, it's a lot of data sets are saying that even your big purchase consumers are becoming fearful. Is not a good sign. And something Kathy Woods comes out with a monthly video essentially around non-farm payrolls and unemployment rates, which is typically next week. But she came out with a new video last night. It's very insightful. I think anybody who wants to get in the market should follow her and get insight into economics, right? Macroeconomics, and understanding how everything is playing out. She's a great resource for that. But to kind of give a Cliff Notes version of what she is talking about in that video is that the consumer sentiment is very fearful. The people, again, that are normally buying are not buying. They are scared of deflation and recession. There's a lot of things that are showing deflation, which is good in an aspect, but she points out that it is a negative deflation. There's a positive and negative deflation, and we are looking more towards the negative deflation here, and understanding that your big retail sales, right? So you're looking at a lot of Walmarts and Targets, right? They had a massive surplus of supply, and the fact that they have to have dramatic price cuts to get rid of supply, and realize that even with these dramatic cuts, it's going to take a while for this bulk surplus to get off the shelf. And with all the different seasons that come in, they're going to have to reshelf different things. And if your consumer confidence is extremely low, and people aren't just buying, your typical buyers, people with that typically have a lot of extra spending money aren't buying and are fearful, that is a concern. Your supply issues are still going to persist, at least for the time being. But the good thing is we are getting some deflation. Some stuff is coming down, which is great. But what the biggest concern here is the Fed. The Fed is driving this. The Fed is trying to front end this essential grasp on inflation. And so, being said, this is why this next meeting is going to be big. I think in the next meeting or this next meeting or the following meeting are going to be very pivotal. But it's going to see what the Fed does. Are they going to come in at another 75-point basis, or are they going to go 100-point basis? If they come in at 100, I think that's going to do more damage than actually help. And understand that you're driving recession. The Fed is single-handedly driving recession to save face, and ultimately understand they don't want inflation to run away. I think they are slowly getting a grasp on it. But again, if they start coming in too hawkish, which is something that Kathy Woods has also pointed out, that they're coming in very, very, very too hawkish, and that they're essentially running off of PCE, which she deems as being a lagging indicator as far as inflation is. So if they're running off that, that could be an issue. We're seeing a lot of companies starting to lay off, and a lot of companies starting to cancel projects, and a lot of deflationary flags that are essentially being signaled right here. That is currently what's going on now. In the longer run, that's not an issue, but we have to understand that it is stunting growth. And you start stunting growth, that will be an issue, and that will start to show in earnings. So this is why this particular earnings is going to be very pivotal on where inflation is and how it is affecting these companies. Now, one good thing to take from what Kathy was talking about was that chip supply is actually doing quite well, and that they're caught up to demand for the most part. So that is a good indicator as far as chip shortage, and understanding that it's essentially innovation and everything else that our economy is based around is as far as technology wise is going to be okay in the long run. Now, short term, again, everything is really based off of consumer sentiment and how they feel. If they feel there's a recession, people will panic. If they're not spending, right, the whole system is running on spending cycles, and people spending money. If you're not getting that, then you're going to have some major issues. So that is currently where we're at. We're currently waiting on the Fed. We're currently waiting on earnings. Again, we won't get bank earnings till the middle of the month, and then that will kind of give us an indicator on what is going on. Again, we did have a stress test just the last week, and it did quite well. But again, consumer confidence is down, and that is this is all purely, again, I keep reiterating this, but this is all purely on what the Fed is doing. If the Fed, again, raises rates too high, you're going to scare off the consumer, and that's not what you want to do. So that is currently where we're sitting at. Yeah, there's a lot of data sets and stuff that is starting to look good. Used car sales are coming down, which is great. A lot of, again, deflationary things are showing, which is great. That stuff has been peaking and slowly coming out, but you have to realize that there's a lot of slow indicators, and a lot of things move very slow. And even recession, right? Like, we're not going to officially have a recession until it's already passed, or we've already been through it. And so, again, the whole idea of what's going on with inflation and deflation, we have to see what is the driver, right? Oil is coming down to an extent, but again, if it starts to run up, it's going to be a major issue. So when it comes to inflation, so we really have to see, again, everything is very sensitive. Every data minute is very sensitive, and ultimately it's where the Fed will land. Where the Fed will land will really determine what's going to happen. Now, hopefully we get some good earnings before then to kind of prove to the Fed that things are okay, and then they start coming down. Now, if they do start dialing back, the market could have a reversal at that point. But we have to see, and I think that's what the market is really waiting on, is to determine if what the Fed plan is. And again, they've been nothing but hawkish on everything that they've talked about, and that is not helping. But if they can come in with some sort of a number that's below 750 or below, I think will help cause the market to do some sort of rally at that point. Again, they've been trying to front run this thing for a while, so we'll see if what they've already done does help. There's again some indicators that are showing that it is, but ultimately it's about the consumer, and we don't want to lose the consumer. So this week, What I'm ultimately looking at is the FOMC meeting on Wednesday. The meeting notes are going to be important. Again, we're trying to gauge what the Fed's next move will be. There should be some indicator in that. In the notes from the last meeting, why they deemed it necessary to go to 75 points and what they are looking at next. Again, there's no market on Monday, and then on Friday, big one is unemployment rate. This is going to determine deflation. This is going to point more towards deflation, and that's what we're looking at, deflation, and seeing if unemployment numbers start getting really bad. Again, and the consumer confidence is very low. You're going to again stunt growth, and this is what the Fed's tool does. It stunts growth, and with them continuing to push rates, will stunt growth. And again, they've talked about it, and they've been well aware. We did have an ECB meeting earlier this week, and they talked about that exact thing. They want to front run inflation, so it wouldn't surprise me if they come in at a 75 or 100 point basis move going into this next meeting, and then possibly dialing back in the next meeting following that, because that would essentially help them cover the summer months where oil prices are typically really high, and then from that point they can dial it back a little bit and hopefully start to try to get consumer confidence back up. Again, once we have earnings and everything like that, it could potentially help coming into this next meeting. But again, there is a lot of weight on a lot of different things. So we'll have to see, because last time we thought we peaked, we thought we hit peak inflation, and it turned out we didn't. And the core inflation, and it ended up dropping us right back down. And this is exactly where we're at. We thought we were going to reverse here, and then we realized that we didn't hit peak inflation, and we just tumbled down to a 100-point basis move. And then we got a 75. We popped back up to that, and then tried to include that 100-point basis move down here. Now we're floating around that 75-point basis move. So those are the two biggest things this week for me. Yeah, there's a lot of other data, but ultimately I'm more focused on consumer confidence, and more focused on the mindset of where the Fed is going in this next meeting. So those are the two biggest ones for me. Watching SPX as always, Tesla, BA, JPM, Airbnb has had some big moves leading into everything that's been going on. So really been watching these. LRCX, it's had some really big moves. Chips are not doing hot right now, even though I said supply chain. Our Kathy Woods had brought up the fact that supply chain for chips is doing well now. You have to realize that it's always a delayed reaction. It's not going to be immediate. You're not looking at the next 2 weeks, right? You're looking at a whole earnings cycle for some of these things to start ironing itself out. And this is why it kind of leads me to believe that the Fed would come in on one more higher rate and then turn around. And once they actually, once all the earnings go through, then they'll kind of adjust from that point. So that's the way I'm approaching this. That's the way I see this coming into and after this next earnings cycle. So we shall see. We'll see what happens there. Again, there's a lot of data that could pull for a bull case or could pull for a bear case here. But ultimately, you have, in my opinion, it's all based on the consumer. That is what matters. And if they are extremely fearful right now, and the fear numbers, something that Kathy Wood talked about, the fear numbers are extremely high, even compared to 2008. So you have to be mindful of that and take that with a grain of salt, because things can change in the drop of a dime. And again, if the Fed come in lower, that would change the sentiment very quickly. And I believe the market could start to rally as soon as it finds that it's hit some sort of peak. So technical wise, we could be making a higher low here. We could potentially bump back up to essentially that. So we can go to the 4K mark. I think could potentially happen if this is a lower high. But ultimately, we want to see if we can break out. Every time we try to hit this trend line, there's been some reason to sell. Like indicated here. We thought we hit peak inflation, only to find out that we were wrong and we just sold back off. So I think this is the same thing that could potentially play out here. But you have to be very careful, because the only reason we sold here was because of consumer sentiment, and right there, the customer is very fearful. And so you got that sell off. I think it could potentially happen another cycle. We could get another, at least one more bump down. My thing is again, if the Fed come in a 100-point basis move, I think it could be driving so much fear that we could break this critical level here at the 36.48, and then we could see some massive selling. Once you start breaking this critical level, I think you could see some panic. But the only good thing you could take from this, in my opinion, is that once you start breaking these higher time frames, the 200 to 50, at any point reversal is where you could be looking at. So, and I've said that even at the 50 EMA on the daily, and the 200, right, floating around the 200. At any point in here, you could reverse. But the point is for every good data set we get bad data sets, and that's not what's helping. And the market normally isn't gauged, and this is really critical. It's because we're going through a historical time. These data sets don't typically hold as much weight, but considering we are battling inflation, these data sets really matter. And so this is why, in doing anything with the markets, you have to understand that it changes. It's never the same. There's always something that's driving, something that's affecting supply and demand chains, right? That's ultimately what the Fed is doing, combating inflation, whether it's going for employment or fighting inflation. So there's a lot of different things that can change the dynamic of the market. So nonetheless, that's kind of what we're looking at, really watching these levels, really watching, again, consumer confidence is going to be huge going forward this month. So we have to definitely keep an eye on that. But that's what I'm watching this week. Again, I think right now, 50-50, if we start talking 100-point basis move, we're going to be down at 36.36. If we don't, and we start to gaining some confidence, could be a new higher low, try to retest that upper level here, and then see from that point, how quick do we make it up here? If we make it up here quickly, that could be a good side for good data sets, as long as we don't get no bad data. As if we get more indication that the Fed is going to come in with a higher rate, or if the consumer sentiment is not getting any better, this thing could really start selling off. So, and again, you don't want to be floating around this 36, this major support. So Bitcoin still doing really well. El Salvador was buying more Bitcoin. So that's one thing to keep in mind. But the biggest thing here is that even though the charts look the way they do, I mean, this thing can grind all the way down to 10K, possibly even get under 10K. Right now, the daily does not look good. The daily looks like it's going to be heading for 10K. But the biggest thing to watch here, I think, is to understand that, whatever, after this cycle of what's going on with the Fed, and once inflation and supply chain issues and everything get away, get some sort of grasp on, we are in a recession. Kathy Woods did point that out quite a bit, and clarified why she figured, with all her indicators, why we were in recession. But this is going to, I think, make a best case scenario for crypto coming out of this cycle. The question is when is this cycle going to reverse? You never know when exactly. Again, right now we are so data sensitive right now. That's why this thing keeps breaking key levels. I think if there wasn't a war that kicked off right after the pandemic, this thing would be potentially at 80, 90K easily. But because of the war that started off, creating more supply chain issues, and a lot of different other aspects as far as the overall market sentiment, has caused Bitcoin to sell off to this point. But I think still collecting and gathering Bitcoin is extremely important, or any kind of crypto. Again, if it's one of the top 10 cryptos, I think you should focus on the established cryptos as opposed to new and upcoming particular cryptos or protocols. So just my opinion on the crypto side. But again, right now this thing looks like it's going to head down quite a bit more. Potentially could see 10K again. So we'll see how that plays out going forward. Again, this is all really dependent on what the Fed's next move is, even the general market sentiment. So the general market, Tesla, like I talked about last week, it's been playing this range really well. I think, again, Tesla, I do really like where it's at. I don't really see it breaking the 625, to be honest, but we'll have to see if what all that involves, right? Like if there's the general market starts to sell, this thing will really test this. If we start talking about recession, that could drive enough fear. Once you start getting fear and panic, this level won't matter anymore. We'll break and we'll see 500 easy, in my opinion. But this wedge is definitely something to watch. Again, any kind of breakout really hasn't mattered. These really haven't been playing out. So until the general market sentiment changes, again, these patterns aren't very good at all. But it's good to kind of watch this level here between the 769 and the 625 mark. Again, I think we're looking to get a breakout here soon. I think we could get a pre-earnings run and then go from that point. So, but that's what we got for Tesla. BA. Same thing. It's also consolidating here, playing this range between 114 and 141 mark. Again, I think the market is. I like the fact that there's a lot of consolidation on the value and on tech. Again, this is why I've been essentially putting Tesla, BA, and JP Morgan on here to kind of gauge the different industries, kind of seeing where they're sitting. I like that all of them are consolidating together. You have to realize, though, that whatever is going to happen, upside or downside, is going to be a huge move. You have to still keep in mind that the downside could very well happen if the Fed keeps raising rates, and you're going to destroy consumer confidence, and it's going to be hard to build that back. That just doesn't come back right away. And so that's, again, another thing to really watch and pay attention to. So when this does break, again, either to the upside or the downside, you're going to get a huge move nonetheless. And the fact you're seeing this across the different industries really matters. And JPM is the other one I have. JPM, it's got a descending wedge. Again, these things haven't really been playing out. Every time we had a descending wedge here, we had a little bit of a breakout, then we came right back into it. So again, same pattern. It's consolidating. We don't want to break. If we're looking for the bullish side, we want a 119 break up. Again, you still got that trend line here you need to break out of. But if this thing breaks the 112 mark, again, you're going to get some massive panic selling at that point. Again, it's at a very critical point here because everything, your banks, your value, your tech, is all consolidating, waiting for the Fed. The Fed makes the wrong move, this thing could break the wrong way. Makes the right move, could break the correct way. But if you are looking to the upside, you want consistency. You want a couple of days of green, not just one day, and think it's a reverse. Unless you are investing 5-10 years out, and you can invest that money and not worry about it, and have to get at that money in the next 5 to 10 years, that's a different story. But we shall see going forward here. Now, Airbnb is one it also is a descending wedge. I don't like the fact it broke this critical level at the 93 mark, and we're retesting. This thing can't break back above. This thing could really flush really hard. But it's breaking way below. This is new territory for Airbnb, so we really got to be mindful of this and watch where Airbnb goes. It's again breaking some really critical levels. I don't like that value. I like Airbnb as far as like value and IPO. Since IPO, right, you're starting to reach new levels that haven't been seen in IPO. So that is really a concern moving forward with Airbnb. And then last but not least, we got LRCX. If I could spell, that'd be great. If I could type, I should say. But LRCX chips, this is the big issue. There's still a lot of, even though the supply may be getting better, you're not going to really see that until probably the next cycle. And so you're going to continue to get fear and panic and everything else that goes on with that. So Again, until the consumer starts to come back, supply chain could be getting better, but you need the consumer to help fix a lot of issues. So the fact that we broke this critical level of 416 is important. Kind of looking for a retest. Could be a potential good short here. Get a retest on Tuesday, and then potentially sell off. Could potentially happen there. So again, there's a lot of different things going on. A lot of different trying to understand what is going on. It's not always 100%. All the information you get is not always 100%. You always got to check multiple sources. Again, my opinion is my opinion. Take it for what it's worth. Have multiple opinions. Come up with your own thesis. Something I always talk about on this channel. It's extremely important that you think for yourself and make the right decision for yourself. And whatever you believe, you should believe that. Also know when to put on risk and when to take off risk. Again, if you're not looking 5-10 years out and you're not an investor, you're an intraday trader or a swinger, you have to understand that this current market, you have to take profits when they come. You cannot sit on anything unless you're long-term investing, and you cannot touch that money for a while. So that being said, if you made this far, I appreciate you. It's a long video, a lot going on. But until next time, I will talk to you guys later.